Steph, you thinking about adding back to Amazon? Reiterated top pick today at J.P. Morgan. Price target 4,600. They say Amazon is almost 40% of U.S. e-commerce and is set to pass Walmart as the largest U.S. retailer by 2022 next year.
Yeah, we started talking about this last week. Amazon was definitely on my short list. Look, I own it. It's 4% of my benchmark. I'm market weight. So I'm not making a big bet either way. But I just kind of thought it had been flat for a while, hasn't really done very much. Yes, you mentioned e-commerce. Obviously, we all know that story. But AWS is 59% of operating profits. So we really care about AWS. And only 15% of the workloads are in the cloud. These guys have a huge share. They're growing that business something like 28 to 32% on average the last couple of quarters. So that's humming along as well. And then I actually kind of like this MGM deal, right? I mean, they have 4,000 film library, 17,000 TV shows. And what it does is it will attract attention and traffic and purchases around the website. So there is an ecosystem there. And so I like that transaction very much. And it's the second largest after Whole Foods.
Michael Farr owns Apple. He owns Microsoft. He owns Facebook. He owns Alphabet. He says FANG's not dead. Amazon's nowhere to be found, Michael Farr. Why?
I wish I could buy it. I wish it would meet my price discipline because I really do love the company and the concept, but it just doesn't meet my price discipline. But, you know, Scott, for
what do you mean? The valuation is just too big? Is that what that means?
No. It's too expensive. No, it's too expensive. I mean, even when you look at the PEG ratio and the earnings growth relative to the price to earnings multiple and that growth rate, it's still too expensive. It's still, I mean, 2 standard deviations even above the rest of the FANG stocks. I mean, it's really it's better, way better than a Tesla. But I want more there. I've got a price discipline that I'm going to wait. If it comes down, I'm buying it all day long. I love the company. But I've also been saying since the beginning of the year with you on Halftime Report that people have been calling for the death of FANG for way too long. It's way too premature. You might be getting a bit of a cyclical rotation out of these names at the beginning of the year, but these are still dominant companies with huge market share, and they're growing earnings at a superior rate to the S&P. That's the story. Earnings growth will drive stock performance over time. I want to own a lot of these stocks with great balance sheets, too. These aren't companies that over-levered. These are good, solid balance sheets, and they're making money. I like a lot of them.
It's tied into, as well, Pete, the Fed story, right? All roads lead back to the Fed and rates, right? If rates remain here or low, whatever your definition of low is, chances are tech stocks are going to do okay. And that was sort of the point, Pete, that PTJ, Paul Tudor Jones, was making as well yesterday, which we did discuss yesterday. His idea, NASDAQ could go up another 20% from here if the Fed does nothing tomorrow because of the correlation. It's a big call. Pete, you with me? Oh, Pete's frozen. Is he unfrozen? He's in his deep freeze. All right, we'll get him back in a second. Farmer Jim, you want to take that?
Yeah, well, it comes back to what I was saying just a minute ago, that very similar to the discussion with banks, Scott. I think the tech trade needs to be decoupled from the interest rate discussion. Right now, it's very tightly coupled, and it has been since February and March. I think what needs to decouple it is actual earnings power. And that's why I said a minute ago that I think second quarter earnings could be that. Obviously, first quarter earnings were not. The markets gave a big razzie to the tech stocks, even though they blew out their first quarter earnings. I'd be surprised if that happens again. I mean, ultimately, stock investing is follow the cash. These companies are generating gobs of cash. And you know what else? If they don't respond, then companies like Apple and Google are just going to keep buying back their shares at low multiples. That's a pretty good consolation prize, if you ask me.